Today's video, I'm gonna show you guys how to use option GEX levels along with Bookmap in order to trade order flow footprint charts. So if you're wondering what in the heck are GEX levels, they're gamma exposure levels in the options market. Now we can get this for equities, but in today's video, we're gonna be talking more specifically about the ES futures contract. And look at this histogram real quick. Right up here at 7,005, this is the highest GEX level to the upside. However, when we came in this morning, we had a powerful GEX level at 6705, but if and when we start breaking below that level, we are going to want to turn our attentions down to 6505. Now, these GEX levels, one, can act as resistance or support, but number two, they can also act as magnets, attracting price down towards them. So keep this level in the back of your mind, 6705. So as we come over and look at these levels real quick, we can see the GEX levels automatically displayed on my chart. Put support is going to be a critical level for me, along with any of these GEX levels. You see a GEX, the lower the GEX level, the stronger the GEX level is. So a GEX 1 would be the highest GEX level. A GEX 2 would be the second highest GEX level. Now this morning on the live stream, we were talking about this where we had an HVL level right up in here. And I said, watch out, if we break below it, we are likely going to come down towards the 730 price point because we had a GEX level there. But ultimately, I was looking for the market to come down just below the 6,700 strike price. And keep in mind, it was right there at 6,705 where we had another high GEX level on that chart. So how can we go ahead and take advantage of this level? Well, wait. Well, before we go over and look at entries, I want to bring something else to your attention. Once the day started getting started, look what we have starting at 8:30 in the morning. Look what we have right down here, right around that 6,700 price point. We are starting to build liquidity down there. Now, just like the GEX levels, liquidity, which we can see on Bookmap, also provides high probability targets. But I want to bring you guys to this first example. I'm going to show you guys on the order flow footprint chart where we had the potential to come down towards this level right here, right around 6738. Now that will be basically front running this GEX 3 level that we have right down here. Now, before we jump into the order flow tools, I want to let you guys know the order flow footprint charts that I'm using is from Affordable Indicators. It's going to be the Impact Order Flow Indicator. Now, if you guys want to check them out, there's a link in the description box down below. Use code Mike at checkout. It'll ensure you always get the best deal. And in case you guys didn't know, they also have the #1 trade copier out there. The one I use is the account dashboard suite. All right, so now that we know we had GEX levels down there, we also have Bookmap liquidity down below us. How can we go ahead and get involved within this trade? Well, if we come over and look at the order flow footprint chart, and let's go ahead and see, can we find areas on the chart where it makes sense to go ahead and take a short trade? Well, there's a couple things that I like to look at. One is going to be the delta. How's the delta forming up, which we'll talk about here in a moment. But number two, what about the imbalances in the market? Well, right here, we can see we had a buying balance. You see the 3 dots on the right-hand side, 1, 2, and 3. It projects all the way out to the right. One, that should act as support. And if we start breaking down below it, that could be a sign that we're starting to see weakness in the market. And then look what we have right up here. When we get this down candle right here, we have imbalances right up here towards the top. 1, 2, 3, 4, 5 imbalances, 2 spaces, and another 3 sell imbalances. What does the market do? We come right up there, and then we spike above it only to reject and come right back down. Now, as I come over and look at this chart, let's go ahead and pay attention to the delta. The delta is going to be the numbers on the bottom of each one of these footprint charts. And this is basically to measure the aggression between the buyers and the sellers. Now, on this candle right here, we have this green candle. Notice we have a delta of a 145. However, the next candle that goes higher takes out this sell imbalance is actually a lower delta, 48. And then we see this another candle right here, this big nasty candle. Look what it does. Not only does the delta flip to negative, but now from that point, we've had 2 consecutive candles where the delta has been declining. 145, 48 is less than 145. Negative 150 is less than 48. And then look what else we had in that candle with the 145 delta. We also had 3 stacked imbalances right here at the top. Now I'm not looking at 2 here and 2 here because for a stacked imbalance, I'm looking at 3 or more. But look what we did. All right, we should be able to hold above that. The fact that we can no longer hold above that price point, we come down below it, that is bearish. Then we look at the delta, that is bearish. And again, we're trying to stack the evidence on our side. And then what do we get right here? 1, 2, 3, 4, 5, 6 stacked imbalances. And then the very next candle, we come right into it. We can then look for a short. So we have a stacked sell imbalance. We violate a buy stacked imbalance, and we have the delta sequence. So just looking at order flow, we have 3 reasons to potentially take a trade. And then when we're looking at Bookmap, we have that resting liquidity right down here, right around 67.38. And when we look a little bit lower, we have already been able to break below the HVL. Below the HVL, we expect lower prices. Above it, we expect a more orderly market going up higher. So since we're below that HVL, we're looking right down here towards 67.30. So 67.38 would kind of be front running this area and also playing off that liquidity that we saw off Bookmap. So now as we come over and look, let's just go ahead and highlight this area. I'm going to assume that we got short on this candle right here. Now there's 2 ways we could have played this. 1, you could have shorted the market right there at that level, or 2, you could have basically shorted it at the close of this candle. Well, let's just say, for instance, either one of those examples, where do we go ahead and place our stop? 1, we can have our initial stop loss right up here at about 67.58.5, knowing that your original entry is about 53.5. So that would be roughly a 5-point stop loss. However, if you waited till we came right up in here and you got short within this imbalance, maybe you got short, we'll call it right here at about 67.48. From there, all the way up towards that high, we can see now we've been able to reduce our stop loss by 4.25 points. But wait, what if we can make it even better? Well, if we go ahead and fast forward here just a little bit, once we see this bearish candle right here, look what we get on this candle. We can then move our stop loss essentially right above the high of that candle, or we can move it right above this stacked and balanced zone. 1, this would go ahead and allow us to put our stop loss in the money, because if we shorted the market right up here, or even at the close of that candle, both of those placements on the stop loss would be in the money. Now I'd probably move it right here to this 34 print. At that point, we would still have, a couple ticks of profit just in case the market wanted to melt down. Keep in mind, we said we were shooting for 67.38. Well, look what we have as the market comes down. And this is the beautiful thing about order flow. Let's pay close attention. The delta, -150, -169, -103. That's a little bit suspect right there. -409. And then we get a -91, then a +38. So right here, we also start to get a delta flip. So in that example, let's just go ahead and take the worst case scenario. You short right below that candle. We can then look and then move our stop loss right above that candle. And at that point, you can go ahead and secure a 5.25 point trade. And then we can look for the market to potentially turn down once again and still play down towards this Bookmap liquidity. If you look, we actually didn't get down to that liquidity until about 8:45 in the morning. But again, we still had a roadmap. We had Bookmap along with the GEX level, giving us a roadmap of where price was likely to go. Keep in mind, in trading, nothing is guaranteed. It's all about probabilities. So if we would have went ahead and exited the market right here at the top of that candle, where could we then look to get short again to play down towards that level? Well, I kind of like this area right here. Notice we had that initial sell imbalance. We barely spike above it. And look what we have right here. We have stacked buy imbalances. And then what do? We end up closing below it. Now, if you guys want to learn how to trade these stacked imbalances for potential reversals in a corrective move back up, then you want to make sure to watch this next video right here.